Adam Grocke from Johnston Grocke here with the weekly update, talking all things for SMEs and for businesses in this episode, giving you a market update for what's happening in the share market and what you should do as individuals. And also, we've got Rhiannon who's going to be talking to us about everything in the lending landscape at the moment. So there's been some interesting changes this week. We're getting information from the government probably every 2 or 3 days now. So we're going to try and keep you up to date as best as possible. We're going to take the approach to do this via a webinar, so make sure we're going to put it in the link down below. So make sure that you register to that. That's going to be a webinar specifically for businesses and SMEs out there to let you know exactly what you need to do, what you qualify for, and how we're going to go through that process. We are going to be running a series of webinars at this stage once a week. And that's going to be focused on a range of different topics to help small businesses through this time, because there's a lot of people affected, and we just want to make sure that we're here for you and giving you valuable information to help you through this journey. So Andy, I'm going to throw to you first. Can you give us a bit of an update as to what's been happening this week from a business SME perspective?
Thanks, Adam. It's been a big week in football, as they say. It's been a huge week. There's been so much information that's come out regarding the JobKeeper and JobSeeker packages. There's been more clarity on that, and the timing of the business booster payments, which affects businesses who are paying PAYG for their staff. The clarity on actually how it works is far better now than it was 7 days ago. So people's finance function, so usually their internal bookkeeper or external bookkeeper, if they need help, can they contact us? We'll help them, guide them through that. There's also some measures to make that bespoke to get as much benefit as possible for the businesses. So it's really much a happening thing at the moment, to be quite honest, very, very timely.
Okay, and also, so what do, so businesses out there, there's lots of information at the moment. What's maybe step 1 and step 2 that they need to do just to get some clarity and make sure that they're setting themselves up for when this payment is ready? Because I believe it is going to be coming in as of the 1st of May.
Yeah, it's coming up pretty soon. Well, again, the finance function is the most important thing. So as I stressed before in probably the last update we did, that people who haven't got the systems in place are going to be affected pretty badly because they're not ready to gather the information. So currently, it's about gathering information as quickly as possible on the current state of play of the business so that we can actually apply for the JobKeeper, JobSeeker and the business booster payments very quickly and timely, because you're right, it's going to start to come out on the 28th of April. A little bit before that. There's certain timing requirements and certain total PAYG requirements that'll be needed. Hence why quality information is so vital if you're going to make the most of this.
Yeah, and so I guess essentially what you're saying is, so to evidence that you qualify for these, making sure that your bookkeeper has reconciled everything, they've got everything up to date, so that that information is true, is accurate, and start that preparation work now so there's no delays moving forward.
Yeah, and we can help you with that. Absolutely. You've just got to make it, just got to reach out to us, and we're reaching out to our current clients. I'm doing meetings every day with people to see what's available for them, to see what's bespoke for them, because obviously not everything suits every business. Yeah. Not everything's available for every business. Yeah. We're doing yeah.
Okay, cool. All right, Matt Wiltshire, look, I'll throw over to you now, because I've been very interesting in the markets. There's been a little bit of a rebound, but I'll throw to you for really what's happening in the markets this week, and what are the conversations you're having with a lot of the financial planning clients at the moment?
Yeah, sure, Adam. Thanks for that. And I guess for those people who don't know me, my name's Matthew Wiltshire. I'm one of the financial advisors at Johnston Grocke. And as Adam suggested, I'll just provide a quick update as to what's happened on global markets over the course of the week. But I also want to touch on a couple of important points that John Grocke mentioned last Friday as well. So as you're probably mostly aware, it's been another volatile market, week on global markets. And I suppose just drilling down on the Aussie market in particular, Monday we saw a 7% rise, strong rise on Scott Morrison's announcement of $130 billion worth of wage subsidies in addition to those previously announced. So, and obviously doing that to cushion the, I guess, economic impact of the coronavirus. But on Tuesday, we saw our market up around 3.5% during the course of the day. However, selling crept in, and by the close of trading, Adam, it was down 2%. So up again, down again, as it has been for quite some time. Wednesday, it opened strongly again due to a lead from Wall Street, and it climbed 3.6%. And yesterday, it sold off again because President Trump came out and said potentially between 100,000 and 240,000 Americans could die from the coronavirus. Now, overnight, Wall Street Dow Jones Industrial Average finished strongly, up 2.25%. However, at one point during the session, it was down around about 4%. So again, highlighting the fact of volatility even through the course of the day. Our market, as I look at the moment, is just trading up about 0.5% higher. So things are going okay, but things can change very quickly in this current market. Now, the ASX 200, which is the indices representing the top 200 companies listed on the stock exchange, fell 21% in March alone. In saying that, from the 23rd of March, it has since rallied about 11%. So was that the bottom? I don't know. Time will tell, obviously. Now, another important aspect with regards to the Morrison government, he's provided support packages of more than 15% of Australia's gross domestic product to date to assist Australians and Australian businesses. And putting that into perspective, that's around about 6 times what the Rudd government provided during the global financial crisis. So obviously highlighting the impact or the how devastating this is going to have to global economies and individuals alike. What else has been happening? I guess the Reserve Bank of Australia also came to the party, dropping the official cash rate to its lowest ever of 0.25%. And as a result of that, banks and lending institutions have also come to the party and have started to support borrowers by lowering interest rates on lending. The downside to that, obviously, are those retirees and savers who require income from their savings accounts and term deposits. Rates have been negatively impacted as well.
Matt, I'll just touch on that for a second, if that's okay, because and thanks for that summary of the markets. I mean, that's fantastic, and I think, is it fair to say the message for people out there? Look, if you've got a high risk profile, you can try and play the markets, but you'll be, as a trader, but that is high risk. If you're not, and a lot of our clients, we advise, look, in a volatile market like this, trading the markets on an hourly or daily basis is obviously risky. What's the advice to a lot of the clients at the moment? Is it sit tight and wait, or is it sell down?
Well, I guess, Adam, under our Australian Financial Services licence with Paragem, we are unable to provide advice around trading specifically. So if a client wants to go off and do that on their own back, okay, play it cautiously, because as I've just mentioned previously, up one day, down the next, and even intraday, markets can whipsaw around. So you need to be quite nimble if you're going to go down that path. But from our client's perspective, it's more of a medium to long-term hold and really concentrating on the asset allocation to match your risk profile, if that makes sense.
Matt, another thing that you mentioned as well is the stimulus at the moment is 6 times what was provided under the Rudd government through the GFC. Also, the banks have come to the party now and allowing people to put their loan repayments on a repayment holiday for 6 months, which didn't happen during the GFC. So we're not going to see a range of forced sellers in this market, which is good because that should stabilise the property market. But we're also seeing the level of stimulus, in theory, if we come out of this in 6 months, and we'll probably never go back to life as normal very quickly, but some sort of normality, that would mean that there should be some sort of recovery on a quicker time frame than what we recovered from the GFC. Is that a fair concept or assumption?
Yeah, I guess, Adam, that is fair. It will take some time, in my opinion, for companies in Australia to actually, if they can actually get through this crisis, that's another issue. But in terms of, for example, as what happened through the global financial crisis, some listed entities on the stock exchange, businesses on the stock exchange, actually suppressed or even cancelled their dividend payments for a period of time. In fact, Harvey Norman, I'm just having a look here before, Harvey Norman announced yesterday that it was cancelling its interim dividend to, quote, preserve and protect shareholder value. So Obviously, there's going to be some businesses that do that, and that's a good thing. It's basically preserving their position, and it's going to provide opportunity, I believe, for those companies who can get through this to thrive, because they'll be in a stronger position, and take the benefit, the opportunity to grow even further. So therefore, once we do get through this, which we will, I'm quite sure, it's only a matter of time. And I think once the investment community get that confidence, then that's when we'll see the markets really take off. So you don't want to be just sitting on the sidelines, because we don't know when that's going to happen, and institutional investors can move very, very quickly.
Fantastic. Thanks, Matt. That's really good. Any advice at the moment for people? I mean, retirees, self-funded retirees have been smashed recently, as happened through the GFC. Any word of advice for them at the moment? Is it sit tight and see this out and cut your spending?
Yeah, certainly, Adam. I guess, and this is where I was coming to with regards to what John raised last week, with regards to those who are in pension phase and they're drawing an income from their age-based pension account. The government, as they did back in the global financial crisis, have reduced the minimum drawdown by 50%. And as I understand it at the moment, a lot of platform providers are still getting their systems in a position to be able to accommodate that, and they will be communicating with their clients or customers very, very shortly. And I guess the positive of doing that, if you can in a financial sense, is you're therefore not drawing more money out of your account than, and therefore potentially having to sell down assets which are distressed as to what's happened over the last 2 months. So effectively trying to preserve capital. So then if there is additional cash in your portfolios, when the time is right, we can start dipping our toes back into the water and take an opportunity at lower prices.
Yeah, fantastic. Thanks, Matt. Like, really sound advice, and I think what the government's doing to move so quickly and to come out so aggressively is going to be fantastic for the Australian people and also for the economy moving forward. So, Rhiannon, I'll throw to you now. You've been patiently waiting in line. What's happening? You're a mortgage broker. What's happening in the current market with lenders and clients that are out there either looking to refinance or purchase?
Thanks, Adam. First of all, I just wanted to do a shout out to all my ladies that can't see their beauticians and their hairdressers. So forgive me, I do normally look better than this. The banks are really, really slow at the moment. They are being inundated with calls for hardship packages from businesses and individuals. They've had to close a lot of their offshore teams because of lockdowns, and that has caused all that work to come back onshore. So they just do not have the capacity to deal with what is being thrown at them at the moment. So they've pulled people from other teams to help with the calls. So they are just extremely slow at the moment. I think Bank SA are at about 30 days to look at an application, 10 days to get documents out. So that just gives you an idea. So if you are purchasing, refinancing, getting a pre-approval, it's going to be slow. If you're going to be calling for hardship, it's going to be slow. If you are trying to get your rate dropped, it's going to be slow. So I just wanted to let everyone know that if you are a client of ours, give us a call if you're worried about anything, and we can have a chat about that.
Absolutely. And Rhiannon, some lenders came out with the emergency rate cut by the RBA and have passed it on. Others have decided not to pass it on. How are you seeing that the lenders are approaching that?
Yeah, so like you said, yeah, some have passed on, some haven't. Some have passed on only a percentage. So I haven't seen that last rate cut make a huge difference. Rates are very low at the moment. Obviously, they're the lowest they've ever been. The fixed rates are still lower than what variable rates are, which means the banks think that rates are going to drop even further. So our advice at the moment is not to fix yet. Still stay variable, because the banks are betting that they're going to drop even lower.
Yeah. Rhiannon, for those that have either lost their job or affected by COVID-19, what are the banks doing in terms of offering repayment holidays?
So yes, so you can ring and wait on hold for a while, but they will give you a repayment holiday from 3 to 6 months. So that means you don't have to make repayments. You do still have to pay interest, but that's put on top of the loan, and your loan term is extended. So that's how they're doing that.
Yeah. And also some lenders have come out because they understand that their call centres are inundated, and they've actually come out and said as well, look, jump online. So if you do jump on their website and search within their website, you can actually apply for it online, which I think is fantastic. So you don't have to wait. You know, some of the call wait times now have pushed into the 3 or 4 hours. So,
yeah.
I mean, a lot of people have a lot of time on their hands, but there's better things to do than sit on hold. So they can go online as well.
They sure can.
I'll just touch on, we're still seeing a lot of buyers out there in the market. We're probably seeing buyers out there who have been looking to buy for some time and have missed out previously because the market's been relatively active. It's an interesting case out there because property prices, a lot of people were talking to us about property prices, and although we think there'll be some softening as the economy contracts, I think here in South Australia, because we don't have the huge ups and downs, we're also seeing supply and demand fall at the same rate, because people are just saying, well, I don't need to sell now. I'm not a forced seller because the banks are going to give me a 6-month repayment holiday. Therefore, the supply is dropping. And as the supply drops, the demand's also dropping because people have either lost their jobs or don't want to buy in this uncertain time. So I think we're still pretty close to an equilibrium at the moment with supply and demand from what we're seeing in this early stage. In saying that, people are still buying some property out there, and people have also decided not to purchase in this time. So it's quite interesting to follow that and see how that's going to unfold. Rhiannon, what have you seen from your client's perspective from purchasing property?
Yeah, probably half and half. So half of the people I speak to say it's too uncertain out there. We just want to wait, and that is even people with jobs like nurses and policemen whose jobs are very secure, but they'd rather wait. And then I've got other clients that are like, no, we want to buy, and they're coming to me for pre-approvals and stuff like that. So I haven't really slowed down. We're still ticking over. One thing I'll let everyone know is some banks have got blanket bans now on certain industries, so they won't look at hospitality, tourism, retail, entertainment. Saying that doesn't mean that's all banks, and that's your job of a broker to find a bank that will have a look at your application. So don't be disheartened, just give us a call. Just thought I'd let everyone know. So. Cool.
Thank you, everyone. We did want to do a bit of a longer video today, or an update today, and cover off a lot more of this stuff in detail and provide you with some advice on what's happening and what you should and shouldn't be doing. So we are going to take a deep dive, as I mentioned in the webinar, which is going to be held early next week. In this link, make sure you do click on the link and you can register to that. That's going to be for SMEs, and we're going to go through a lot of the information as to what you actually need to do to prepare yourself for the stimulus packages that are available, and also how to get through until that money comes, because that money's not coming tomorrow. There's still another 4 weeks until you can access that money. So thank you very much for watching. Stay safe, have a fantastic weekend, and we will be back next week with a weekly update. Thank you.